And while Russia's unprovoked invasion of Ukraine remains unsolved, the fear gauge index has retreated over the past 2 weeks. Here to give us some additional context from an ETF lens is Tom Lydon, ETF Trends CEO, as part of our ETF report brought to you by Invesco QQQ. Tom, great to have you here with us today. Help us break this down, why we see the VIX retreating even though we still have some unresolved matters on the broader international conflict side.
Well, it may be that they're having talks. It may be that the Fed is not as hawkish. It might be stability in the marketplace. We've seen a week or two where growth stocks have come back a bit. So somewhat positive out there. I mean, when we saw just a few weeks ago, the VIX was up around 40. Now it's hovering around 20, about half that rate. So positive for the market, but it's not always an indicator of what we might be seeing down the road.
And so are there ETFs that gives us good insight as to how to best track volatility?
Well, there are definitely some ETFs out there where you can actually invest in the VIX. They're pretty aggressive. You have to know what you're doing. Actually, Volatility Shares just announced they're coming out with two new ones. One inverse the VIX and another one that's 2 times the performance of the VIX. And as you know, and kind of as you're referring to, the VIX has been somewhat famous in the ETF space for not only providing a lot of upside and downside opportunity, but also 4 years ago, we had a VIX product blow up. We had the Velocity Shares inverse VIX product that had almost $2 billion of it. Here's the situation. It had an amendment that was actually included in the prospectus that said if the product went up by 100% in a given day, that they could actually close it down. And on February 15th, 2018, that's exactly what happens. So there were a lot of investors who were tiptoeing into a space where they didn't, in fact, know what the risks were. And a lot of people were left with tears in their eyes.
Well, one firm that's gone from tiptoeing to diving headfirst is now Morgan Stanley. The significance of that firm entering into the ETF space to you?
It just keeps getting better when you think about big investment companies like Capital Group that just entered. Dimensional Fund Advisors converted a bunch of their mutual funds over. Now they're the biggest actively managed ETF company with $49 billion. And again, with Morgan Stanley, $1.5 trillion, seeing all the benefits of ETFs and now saying they want to enter the space too. They've hired a couple industry veterans, one from State Street and Goldman Sachs, another one from BlackRock. Obviously, they've got huge distribution, and they're seeing the flows in ETFs continue to go to the upside where they're challenged on the mutual fund side.
What does it tell you that for an asset class that typically would be a hedge against volatility or a hedge against downward momentum, that there is now more of that approach in the ETF space that actually caters directly towards traders, investors that are looking to play off of volatility?
Well, the great thing is there are more choices than ever. And if you're a individual investor and you're not trading, you're just trying to do asset allocation, there's plenty for you. At the same time, there are a lot of traders out there, whether you're an institution or an advisor or a self-directed investor. They're all different shapes and sizes. However, more than ever, the thing we talk about all the time is you have to understand what you're buying. It's interesting that all this is coming out at a time when FINRA, the Financial Industry Regulatory Authority, has released a new regulatory notice about complex products. And complex products can be anything from inverse and leverage to having options overlay strategies or any type of derivatives, even small, within a specific ETF. They're out for a comment period up until May 9th, but a lot of folks in the ETF business are a little concerned that they're going to put up warning walls or firewalls for investors who haven't met certain criteria, or even from an education standpoint have met certain criteria. We don't want that. Obviously, you want the freedom to be able to buy and sell and leave it up to investors to do their homework. However, there is concern there that some people might shoot themselves in the foot I think from our standpoint, there are a lot of other scary investments out there as opposed to ETFs. It'll be interesting to see how this comes out.
Tom, I got to hustle to my finish here, but lastly, do you believe that we'll get a spot Bitcoin ETF by the end of this year? As of right now, it seems like Grayscale is going to set itself up for a potential legal battle if the SEC declines its proposal.
A lot of people have some skin in the game. There are a lot of players in place. I, like many, are going to be at the Bitcoin conference next week in Miami. Looking forward to it. We're in close contact with the folks at Grayscale and many of the issuers out there. I think it's one thing that you're not going to be able to prevent, but Gary Gensler is a really smart guy, and he's not for it right now. He's more for more regulation than less regulation in the cryptocurrency area. But jury's still out. I don't think it's going to happen this year.